Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's June 20th, 2023. We got a special show coming up for you. We're going to dive into the hottest topic of 2023, artificial intelligence. We're going to break down what AI is. Is it a fad or a megatrend? And then, if you think it is a megatrend, which stocks you should be putting on your watch list right now to play what potentially could be the biggest trend since the internet. All this and more coming up right now on Making Money. Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions. He just gave them a dire warning. Mark says, we're about to witness an historic stock market shakeup that can soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history. And he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash2023.com. He includes a name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of the beloved pet brand Chewy before it fell 45%. Tech company C Limited before it fell 66%. Furniture company Wayfair before it fell 76%. Social media favorite Snap before it fell 36%. And food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the FANG stock fell 35%. So you'll want to avoid the stock in this new report immediately. Again, simply go to rollingcrash2023.com for your free copy of this new report. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is the 20th of June, 2023. It's a beautiful Tuesday still down here south of the border in Nicaragua, as you can see by my beautiful painting behind me. And as I mentioned today, we're going to dive into a topic that has been something like I haven't seen in a long time. You know, there's been trends that have come and stayed. There have been fads that have come and gone. Some that just grab headlines and have people scurrying for ways to make money off it. But when it comes to artificial intelligence, it's a bit different. We can go back and look most recently at, let's say, the meme stocks during the shutdown induced by the government for coronavirus. And that, led to a lot of people sitting at home, couldn't go anywhere, everything's closed. So they were forced to come up with new hobbies. And a lot of those hobbies led to, outside of drinking too much, investing in the stock market. And that led to what we called meme stocks. And majority of the time, these were companies that were absolute garbage. But they got this type of upswell from the community and would push stocks higher. We all know about AMC, GameStop, Bed Bath & Beyond, all three in major trouble right now. But stocks that went up hundreds of percent, and some people buying options up thousands of percent in a very short time. That was a fad because the staying power of investing in companies that are garbage is not there. We can take a look back, going all the way back to, I believe it was the 18th century, if not the 17th century, the great tulip craze in Holland. And if you don't know that story, Google it. It's a great story. Tulip bulbs, believe it or not, were the hottest thing in the world back then. And that was one of the greatest examples of a bubble, because then people then realized, heck, they're just tulip bulbs. That's it. So if you ever want to learn about bubbles and the psychology behind it, that's a great one to look into. So a lot of people are starting to do some comparisons with artificial intelligence, what's going on now versus some other trends in the past or bubbles in the past. So let's get it out there right away. Artificial intelligence, the big picture of how it's going to affect the world and virtually every industry, is a megatrend. It is not a fad. It is not a bubble. I'll get into the word bubble a little bit later, but it's neither of those things. And keep in mind that artificial intelligence has been around for many, many years, over a decade. What do you think is going on when you search for Google, or if you search for something in your phone? How many times have you went and searched for something in Google, you type 2 letters and it fills in exactly what you're thinking? It's pretty amazing. That's artificial intelligence, folks, is what that is. That's many, many years of taking all these searches from you and the billions of people around the world and putting into machine learning and putting into artificial intelligence and predicting what you're going to look for. It's predictive analysis. So it's been here, and that's just the early stages. We're going to talk about really what it looks like in the future and different stocks and companies that are backing that in the future. So there's no debate in my mind that this is a mega trend. You can debate whether it's similar to the internet in the mid 1990s. I think it is. Other people have referred to it as potentially an iPhone moment. I mean, think about the iPhone. What's it been now? 15 years, give or take. The iPhone's been around, maybe not that long, probably around 15 years or so, that the iPhone's been out. And just think about what life would be without a smartphone. I mean, I don't care where in the world you live. And a lot of times in some of the poorest and most rural areas of the world, smartphones are more prevalent because they never built landlines. They didn't have lines running through because they didn't have the infrastructure. So they jumped ahead a generation to get communications. They went right to phones. And obviously with satellite link and all the different projects that are connecting these rural areas through satellites, through fast Wi-Fi, you now have access to that basically in majority places of the world. Granted, there's still some places that don't, but majority places of the world. So that changed the world in many, many ways. You wouldn't have Uber without that. You wouldn't have, I mean, I guess you have Netflix, but I mean, a lot of people stream it on their phone. Think about all the social media that people do: Instagram, Snapchat, TikTok, etc. All that stuff out there. So it changed the world. So maybe it's an iPhone moment. The difference is, even though the iPhone moment was connected to many different industries, from e-commerce to social media, artificial intelligence has tentacles that go out much wider than just the iPhone. That's why I kind of liken it to the internet, because the internet obviously has affected, disrupted, benefited every industry in the world. There's not one industry that doesn't help. You'd say, well, what about the guy laying bricks out there right now at the house next door? Well, there's a good chance that contractor priced out those bricks using the internet, or bought them using the internet, or some type of logistics to get them delivered here was done through the internet. So there are ties to that you have no idea about, or that you don't see on the surface when you look at it. Or is it like the Industrial Revolution? Because again, AI will be implemented into virtually every single industry. Or it's just like the metaverse. The metaverse is a trend, but it was hot about 2 years ago, and then suddenly cooled down. But the metaverse is still here. The metaverse is continue to grow, but it's nowhere near the scale that we see with artificial intelligence. And again, folks, keep in mind, when people do call it a bubble, and there's too many bozos out there calling it a bubble right now, and maybe they're right in the fact that a lot of these stocks have gotten ahead of themselves in the short term. And that is true. A lot of these stocks have gotten ahead of themselves in the short term. NVIDIA this morning, I looked at it, was up nearly 200% year to date. It's like 195% or something this morning, year to date. We're just closing in on 6 months. That's a huge gain for a now $1 trillion company. So yes, there's going to be pullbacks in these stocks. Could NVIDIA run to 500 before it pulls back? Heck, I don't know. It's in the low 400s now. Could it pull back to 350 and still be a great company? Sure. But that's a 20% pullback from here. So we have to look at things in perspectives. In a very near term, could these stocks pull back 15, 20, 25%? Yes, they could. But it doesn't mean it's a bubble. That is just how these types of trends in the early stages act. I've talked about this for many, many years. Any of the biggest winners out there, the biggest winner in the last 30 years is Monster Beverage. Monster Beverage it's up, I think, 120,000% in the last 30 years, something like that, give or take. I mean, either way, it's mind blowing. When it comes to stuff like that, Monster Beverage didn't go straight up. And that's what we need to realize, you know. And Monster Beverage isn't nearly a trend, but I'm just talking about these big winners. And I've talked about Amazon, I've talked about Apple, I've talked about Netflix, Nvidia even, and the gains that they've had over time. But then you look about how many times they've had massive pullbacks. Monster Beverage in the about 2005, 6 or so, pulled back nearly 50%, rallied too high, then pulled back about 70%, rally too high. A few years later, downward 40%. And then from there on, from about 2013 on, multiple pullbacks of 20, 25%. But again, still along that time frame, being the best stock market return in the last 30 years. So that's normal. That type of stuff will happen. So let's go back a little bit and take a look at the internet, because I think if we're going to compare it to anything, I think artificial intelligence, the closest comparison right now is the very early stages of artificial intelligence, looking at the mid 90s or so, early to mid 90s. So I have a couple of charts here I want to show you that kind of really reflect what we're looking at. And if we take a look here real quick at just some of the stocks that were really the big winners of the 90s, Microsoft, Cisco, Qualcomm, and Applied Materials. I took a look at those 4 stocks. The worst performer from 92 through 2000 was Microsoft, up 2,420%. So I mean, it's still an insane gain. Not near the 11,540 Cisco or 11,280% in Qualcomm, but it was right there with huge returns. You can see in that chart just the massive return. So you think to yourself, wow, that's truly the power of a huge mega trend, which was the internet. Now I'm going to take the same time frame, folks. And this is a messy chart, but I'm going to break it down. It shows a point. And this shows pullbacks from highs. The blue line is Qualcomm. You can see since 92, how many times it pulled back? Over 50%. 2 times. 1 time down about 65%. Several other times down well over 20%. The green line, which is Applied Materials, again, 2 pullbacks over 50%. And even look at Microsoft, which was a little bit more stodgy. Still, several pullbacks over 20%, that purple line along that time frame. And again, there's Cisco in there again with several pullbacks, one of at least 50%, 2 more of over 30% in that time frame. So what I'm really trying to get at here is the fact that when it comes to a mega trend, we cannot expect it to go straight up. So these 20, 25% pullbacks, if not even more, ultimately, if I'm correct and this is a mega trend and we have a basket of stocks that are tracking this mega trend that we think are going to be huge winners over time, you have to be either ready for these pullbacks or use these pullbacks to add to the position or use these pullbacks to initiate positions or initiate new positions in other stocks in this trend. So you have to use it to your advantage. And again, it's kind of a beaten down phrase that people use. You know, it's a marathon, not a sprint, but truly it is. It's one way to look at it is to think about, like, it feels like yesterday before coronavirus, and that was early 2020. So you're looking at over 3 years ago and how much has happened in the market since then. And it feels like yesterday. Sometimes time goes so fast, folks, that you have to realize that these short-term swings that get you out of the stocks or get you into stocks or scare you or get you FOMO, fear of missing out, ultimately will hurt you. You need to think big picture and think that marathon. You know, a lot of people are asking, well, you know, what is the ultimate end game here with artificial intelligence? And to me, it is similar to the internet. And let's look at the numbers from the internet. At the end of 1995, there were around 16 million internet users in the US, 16 million at the end of 1995. It continued to move up through the 90s. By 1999, that number was over 100 million. So you can see how that growth from 16 to over 100. Obviously, there's over 330 million or so people, 320 million people in America. And majority of them have access now. So it's probably above 300 million at this point that have access to this. And to give you an idea of companies and really what they're saying about artificial intelligence, take a look at this chart. This is the number of S&P 500 companies. So this is out of 500 companies that are citing artificial intelligence on their earnings call. And so this is every quarter for the last 10 years. We can go back to the second quarter of 2015, so not that long ago. about 8 years ago, only 3 mentions. So 3 out of 500. The first quarter, which obviously we don't have second quarter earnings yet, that come out in a few weeks. First quarter, 110. And I would put money on it. That number is going to be significantly higher in the second quarter. So you're seeing just, again, how this trend is taking off. And this number can tell you 2 things. One, we're still in the early stages because it's still on its way up. Eventually, I think every company out there is going to be mentioning AI on every conference call because it's going to have to do with every part of their business model. So it shows you that it is early stages. It also shows you that 1 in 5 companies last quarter, the S&P 500, did refer to artificial intelligence. So it is starting to take hold. It's 20%. So even though we're early stages, it really is starting to take hold, and we're starting to see this. So why artificial intelligence? Well, it helps overcome human flaws. Many times when humans look at data and information, we have powerful minds, but we don't always use them to our own benefit. And many times it can be detrimental. I'm one of them. I have one of those minds that I lay in bed and it's going like crazy. And I've always told my therapist that I love my mind because it's gotten to me where I am in my career and with my friends and my family. But it can be my biggest enemy when it goes against me. And I think a lot of people know what that feels like. So when it comes to AI, you're trying to get rid of some of those human flaws. One of the flaws is what we call the bandwagon effect. I like to call it the sheep effect, or the Peliway effect. And if you don't know what a Peliway is, look it up. First of all, I guarantee nobody out there knows how to spell it correctly unless you're from Central America. Peliway is like a lamb-sheep mix. I think it's more like a lamb, but very good eatings. But they're like sheep. They kind of go. When I go to the gym later today, they go from field to field and they move in herds. Boom, 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 boom. Can't get in the way when they're moving. So we tend to have that bandwagon effect when it comes to making decisions. And we just kind of go with everybody else because it's more comfortable. I always use the analogy, too, of going into a restaurant or a bar. If you're in a city, you're going to trying to find out where I'm going to eat, where am I going to find a drink. You'd much rather go to a place where it's packed. Oh, man, it must be great. And look at all those people. Then across the street into the pub where there's 2 people and you walk in, like, what the hell's going on here? It doesn't mean that one's better than the other, but we tend to always follow like sheep, that bandwagon effect. Availability bias, meaning we only have availability to so much data. So we base our bias off that data. Artificial intelligence, machine learning can pull from a larger pool of data, which makes it obviously come up with a different end game. One thing that's called apophenia. And this is when we connect between uncorrelated data points. One of my colleagues, Doc Eifrig, he's done this many times at our annual conference, which, by the way, is coming up in mid-November in October in Las Vegas. Please come. It's going to be amazing. We do a lot of great speeches there, a lot of great people, a lot of great guests. Lance Armstrong's coming this year. It's going to be our keynote. Interesting to see what he has to say. I'm going to get him on the podcast as well. So I have some tough questions coming up for Lance. But what Doc does is a lot of times he talks about these correlations, but they're really not correlated. You're connecting 2 things that make no sense to each other. We tend to do that a lot. Logical fallacy. That's allowing irrational factors to influence decision-making or conclusions. We do that. We're humans. Of course we do that. So AI should get rid of all this stuff. And the other thing is we can't truly take in all this data and analyze all the data that's being created today. The amount of data every day, the amount of data being created every day is more and more. We can't take it in. AI can do this much faster. And they can also pull the signal from the noise. There's so much noise out there. And then take that data and make it useful data. Really, and then reduce that cognitive bias I'm talking about, reducing that. So let's put this in numbers, because as you all know, I'm a numbers guy. So AI is expected to see annual growth of 37.3% per year from 2023 to 2030. And if you think about that, that's from Grandview Research. You think about that, there's something called the law of 72. So you add up your percentage gains, and then once you get to 72, it doubles. So obviously 37.3 times 2 is 74.6. So that means every 2 years, a little less than 2 years, it doubles. And the compounding, phenomenon there of doubling, that is huge. The AI market from another company says it's expected to reach $407 billion by 2027, That's up from just under 86 billion last year. Again, amazing growth. This is a number that I thought was really fascinating. AI is expected to contribute 21% net increase in the United States GDP by 2030. So again, this shows the impact it has on GDP growth. To have an impact like that of 21% increase between net increase between now and 2030 in 7 years shows again the way it's able to spread from industry to industry. And it's touching every single industry, folks. ChatGPT, which a lot of us are using now. If you're not, go to OpenAI. It's free. You can pay for upgrades, but it's free. And just play with it. It's amazing. They had 1 million users in the first 5 days. This is the fastest ever for any app getting there. And they in the first 60 days, they had 100 million users. Again, setting all kinds of records. You talk about some use cases. 1 in 10 cars in the world in 2030 can be autonomous. And what do you need for that? A lot of AI, folks. That is a ton of AI. The global market for self-driving cars is forecast to increase from 20.3 million in 2021 to 62.4 million. So a bit of an increase there. So yeah, I can keep going through the numbers, but I think you kind of get the point when it comes to the numbers and just really the upside potential when it comes to artificial intelligence, folks. Though we do have to talk about some risks. One thing is looking at, when the data that's going in. So if you're putting in crappy data, you're going to get crappy outcomes. So you have to make sure that it's getting good data, because if it's not getting good data, it's only based off the data it has available. And that could end in a bad result. Something called hallucinations. And I've come across this. And this is when you ask ChatGPT a question and it gives you an answer, but sometimes that answer is completely fabricated. And it may say something about you. I'm like, well, I've never done that. I've never accomplished that. But thank you, ChatGPT. And they just hallucinate. It's called hallucinations. I think that will get better over time. Again, we're just in the very, very, very early stages of large language models. They're called LLMs that are using this type of AI right now. So I think we're still in the very early stages of that, and that will get better. Governance is another one. What will governments do? Because remember, a group of engineers, CEOs came out and issued a warning. It was a very short warning, 22 words, but it came out and they basically said, mitigating the risk of extinction from AI should be a global priority alongside other societal scale risks, such as pandemics and nuclear war. So we need to have some type of governance over this. And what's that going to be? It's a big one. And when Reuters and Ipsos did a poll, 61% of the people believe that AI poses a risk to humanity. It's a pretty big number. 22% disagree. About 17% are unsure. So there definitely is some worry out there, and for good reason. I don't think we're there yet, and hopefully it's done the right way, but there's always bad actors, so we need to keep an eye out for that. What about jobs, folks? Big concern is jobs, and the World Economic Forum predicts 25% of jobs will be disrupted in the next 5 years. I think it's higher than that, and I think eventually probably 80% of all jobs will be disrupted. Doesn't mean you're going to lose your job. They will be disrupted. Think about what I'm doing here right now. In a few years, you could have a chatbot doing it and make that chatbot look beautiful and nice and have a great background and anything and put together an entire podcast of 30 minutes for you, all generated by that. My argument is that there's no personality in that, so you're not going to get that personality. But there will be certain jobs where you're just spitting out information, folks, or just writing that will be upended and already being upended and disrupted. So we need to keep that in mind. PwC estimates that AI will contribute 15.7 trillion to the global economy by 2030. So I want to end the numbers with that, because I think that's something that even if that is half, and again, I'll repeat that, PwC research firm estimates that AI, artificial intelligence, will contribute 15.7 trillion to the global economy by 2030, next 7 years. Yeah, even that's half. That's a groundbreaking number. That's going to upend a lot of industries. All right, folks, so let's actually dive into ChatGPT and see how it works. Again, I mentioned you should go try it yourself, but let's jump into it. So as you can see here, you can go to OpenAI, set up an account, which I already have set one up. And let's go to ask it, what is GPT-4, which is the newest version? And let's see what comes up. See how quickly it comes up here, starts giving its information. I'm not going to read through all this, you can see, but it says, as an AI language model, my knowledge cut off is September 21st. I don't have knowledge of developments that have occurred after that date. As of my knowledge cutoff, there's no official information available about ChatGPT 4. The latest version was released at the time, GPT-3, a state-of-the-art language model that is known for its ability to generate human-like text and perform various language-related tasks, which is pretty amazing because it does cut off September 2021 unless you do some upgrades, which I don't have it on this version right here. So as you can see, it does tell you that, which I really like. So let's ask it, how can we use GPT? And see what it says. And it's following on that question above. And you can see here, it takes a few seconds to come up with it. But it says to utilize GPT, you can follow these general steps. And again, it says identify your requirements, access to implementation, you set up your environment, interact with the model, fine-tuning it, which is something that is very important when you're looking at it. But again, this takes you through by a simple question, and this is very similar to as if you're just talking to somebody. So it's pretty amazing. And let's ask them an investment question here. So let's say, what stocks are the best to take advantage of GAI, generative artificial intelligence? And let's see what it comes up with. Because I will tell you, it's not taking my job anytime soon. However, it does give us a pretty good answer. It says, when it comes to investing in companies related to general artificial intelligence, here are a few points to consider. List technology companies. It has in there Google, Microsoft, Amazon, IBM. AI-focused companies, has NVIDIA in there, obviously. That's been a big winner. Industry-specific applications. And it talks about how it can be used in different areas from pharmaceuticals, diagnostics for drug discovery, finance, automotive, retail, etc. And then ETFs. And it mentions a couple of ETFs that have relations to artificial intelligence. So it's pretty fascinating how it works. And again, we could sit here all day and do this. I don't want to do that. But I would really recommend you go out there and play around with it. As far as using it to buy stocks and get stock recommendations, it is not there, folks. And again, this information only goes to September 2021 on just a free version. So again, you have to keep in mind there that this is far from really giving you any up-to-date information as far as investing at that point. That's a year and a half ago. So a couple of use cases I think are important to kind of show you how it works. VHP, which is one of the largest miners out there, they came out last week and they said they're teaming up with Microsoft, and they're going to use artificial intelligence, machine learning to help improve its copper recovery from its Escondida copper mine in Chile. So you can see it's even used in an industry like that. As far as advertising, NVIDIA is working with marketing firm WPP. It's a big firm, and they're using generative AI, which we just used, GAI, content engine for digital advertising. And they're going to use this content engine with NVIDIA's products and use for creative teams come with high quality commercial content, obviously faster and more efficiently. You have transportation. Again, NVIDIA is involved in this. MediaTek, which is an Asian company, to offer some in-vehicle AI solutions to the in-car cabin, which is pretty amazing. And here you're going to have these very smart cabins in the future, especially when we get to autonomous vehicles. Finance. JP Morgan announced a couple of weeks ago developing a ChatGPT-like software that helps its customers select investments. And they filed a bunch of trademarks for that. So that's just a couple examples of four very different, mining, advertising, transportation, finance, all using it. But I think where we're really going to see a lot of it, maybe not see it, but feel it, is in supply chain. By using artificial intelligence in a supply chain, you'll be able to know when the shelves are getting low, when they need to be filled. It's all done behind the scenes by a computer, contacting the logistics company, let them know to get out of the warehouse, get it here for this day, we need it. Supply chain is going to be upended. I think that's going to be really important. And that's going to then roll over to transportation, which is obviously in bed with supply chain and logistics. Everything, and maybe having sidewalk robots, self-driving cars and trucks that deliver things to you. All this is interconnected, folks. It starts here, but it goes so much bigger. And just a couple other numbers I want to throw out there as they came across. $7 trillion global economic growth driven by AI by 2030. I already mentioned there was a $15 trillion number. Again, it's tough to ignore these huge numbers. And the numbers are going to be all over the place. But the bottom line is, as far as economic growth, economic impact, you're looking at trillions and trillions of dollars between now and the end of the decade. Again, it's from the low trillions to the mid double digits, teens, I should say mid-teens. It's going to land somewhere in there. And either way, there's going to be a lot of money sloshing around and a lot of winners in the stock market. And that's where we're going to talk about now. So let's take a look here at some stocks. Obviously, one of the big ones that has been running, as I mentioned a couple of times, almost up 200% this year, is NVIDIA. And pretty amazingly, Morgan Stanley just came out last week, named NVIDIA its top AI pick. They pushed it over. They're still overweight AMD, Advanced Micro Devices, but they put it above it as its top pick. But AMD was their top pick for the year, and now they have NVIDIA. Even though it's up nearly 200%, that kind of says something. All right, a little late to the game, yes, but I still think NVIDIA is a great company. You look at the rest of the decade, it's going to be driven by data center business. They're a huge data center company. And of course, you're going to need more data centers because all the information that's being generated from artificial intelligence is going to need somewhere to live. And data centers are going to see a huge demand. And via that, you'll see huge demand from NVIDIA products. And you're going to see these GPUs used for the large language model training. And again, NVIDIA is a leader of GPUs out there, graphic processing units. So yeah, I mean, it's big, folks. AMD is another one, another semiconductor company that continues to push forward into artificial intelligence as well. AMD has had a heck of a year as well. So you're going to see a company like AMD often referred to as kind of like the junior when it comes to NVIDIA. As I mentioned, NVIDIA is already a $1 trillion company after its big run we've had 2023. Advanced Micro Devices is about $191 billion company. So a little less than 1/5 the size of NVIDIA. And but if I look at the estimates going out for AMD, last year it made $350 a share. A bit of a dip this year. You're seeing a lot of dips coming back after kind of the post-COVID run-up, down to $288 a share. But by 2025, back to $533 a share. So you're seeing a big ramp back up. Revenue, $23.6 billion last year, about $23 billion this year. But again, by 2025, over $31 billion. A lot of that's AI-driven, folks. And you look at price of sales. If you take a look at NVIDIA, it's around 40 times sales right now. If you look at AMD, it's around 8 times sales. So a little bit different there. Forward PE ratio on AMD of around 28. We take a look at NVIDIA, and I'm not saying one's better than the other. We already dove into this topic last year. NVIDIA's got a forward PE ratio of 44. So again, a little more overvalued, but sometimes that overvaluation is justified because it is the pure leader, which at this point right now, it is the pure leader. So it can be justified. And keep in mind, in the short term, stocks can be very overvalued and very undervalued. We've seen that a lot just in the last 5 years. What's happened with the run-up prior to COVID, sell-off during COVID, the run-up after that, the sell-off we had last year, and now running back up again. So we've seen a lot of this in the last couple of years. Another chip company to keep an eye on is Marvel, MRVL. It's another company that's moving into the AI. It's been in AI, but it's definitely another name to keep on. So of the 3 chip companies, large chip companies, and NVIDIA, AMD, and Marvel are 3 you want to throw on watch list. Again, nothing here is a buy or sell recommendation. It may sound like I like these stocks or don't like these stocks. That's not it at all. This is education, giving ideas, and you can Google this anywhere, and these are the companies that are coming up. And then let's take a look at the big fangs, out there. Apple, they recently introduced their Vision Pro. We talked about that. That's their spatial computing headset. That's going to rely heavily on AI. So that's something, Apple is not going to be left behind when it comes to artificial intelligence. Just know that. They're going to have a place in there. Microsoft, they obviously own part of and have a partnership with OpenAI, which came up with ChatGPT. And they're really working ChatGPT in basically every single product they have. So again, this is a great way to look at AI. When it comes to these bigger firms, the one, not red flag, kind of yellow warning flag or whatever color warning flag is to know that you want to see how much effect it has on its revenue. Because these are such large companies, both multi-trillion-dollar companies, that if it only affects sales by a little bit, it's not going to mean much. I think Microsoft, you'll see it affected quite a bit. Apple, I'm not quite sure exactly how we'll see that play out, but they will. I have no doubt Apple's going to be tied directly to AI in the future. One niche area to look at is you take a look at the housing market, which housing numbers came out this morning, and they're pretty damn good. Housing market's been strong, folks. I mean, you'll argue with me, but look at the housing stocks and look at some of the numbers. It's not nearly what you think it is. There's not enough homes out there. It's the bottom line. And a lot of people aren't putting homes for sale because they're locked in at low interest rates. So if they sell and buy something else, they have to buy at a much higher interest rate, can't afford as much home. Makes perfect sense. Compass and Redfin are two companies that are incorporating artificial intelligence. And I've been saying this for years. My brother-in-law is in real estate. I have many, many good friends in real estate. I think it is a dying business. I think there'll be a couple of realtors here and there, maybe for commercial, some wealthy people. It's all going to be driven by internet and AI, and it's metaverse. You'll be able to walk through everything 3D. I think it's going to be completely upended, and throw in some blockchain in there as well, which will make things much easier and hopefully eliminate title companies once and for all. Bank of America came out with their list of top AI stocks. They had Microsoft in there. Oracle, big software company, really diving into AI right now. HubSpot is a very interesting company. Salesforce.com, some CRM. Think about that. Customer relationship management. What better than have AI help you, your relationship with your customers and manage that? Man, that makes perfect sense. Adobe, Photoshop, everything. At first, I read an article about a couple months ago saying Adobe's going to be knocked out by AI. They've done the exact opposite. They've incorporated artificial intelligence into their business. And go play around with Adobe if you have time. Boy, is that fun to play with that. Shopify, Shop is listed. All these were listed in the 13 in the top stocks from Bank of America. They took 13 criteria, broke it down, and this is what they came up with. Shop is one of them as well. Obviously, big e-commerce, logistics that will help that as well. So, really, at the end of the day, here, folks, there's going to be a lot of companies that are directly and indirectly affected by artificial intelligence, and there's going to be so many different ways to play this. You're going to hear about so many different ways to play it. I could go on and on. I could write books and books just about investing in artificial intelligence. My book I'm finishing up now, there is going to be a chapter completely to artificial intelligence, which I'm kind of redoing right now because of everything that's going on. May have to redo it before it goes out. And I could do shows and shows. I could have a podcast just on artificial intelligence and do it twice a week and still not get to everything. So I just want to give you a quick, brief overview and break down that this is a megatrend. It is not a fad. It is not. It is not a bubble. Have we run up a lot here in the near term? Yes. Could we pull back? Yes. That's not the definition of a bubble. That's just getting ahead of ourselves in the near term. So it is a megatrend, folks. It is not a bubble. It's going to have trillions of dollars of effect on a global economy by the end of this decade, which is only 7 more years. I liken it to the internet in the mid-90s. And I think if you look back at the early 90s, I went from 92 for some of those stocks, and those are life-changing. You need one of those stocks in your portfolio, and it will change your life forever. Hopefully, we'll get a few. And again, for our subscribers, we are doing deep research on which ones we like, and we already have some in there that have done very well this year, very, very well. Some related to healthcare that have just been gangbusters. So there's going to be more that we're going to recommend to our subscribers coming up. And I'm going to continue to talk about it here on this show as well. But I will say, folks, this is a mega trend that cannot be ignored. It's not going anyway. If you think it's just going to go away, you have to get over that, because it's not. It's going to be here to stay forever. It's been here for a long time. I used to tell people years ago, artificial intelligence is a trend that's everywhere, but nowhere. It was already everywhere years ago, but you didn't know it, so it felt like it was nowhere. Now, I'd say next couple of years, AI is going to be a trend that is truly just everywhere. Thanks so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.